Welcome to the Monday edition of Tech Stocks Daily. Today, we're diving into the EU's antitrust smackdown on Apple that could cost them billions, NVIDIA's jaw-dropping prediction of a 67% stock surge, plus why they're battling it out for the most valuable company spot. Also, HubSpot's stock surge thanks to savvy pricing and AI moves. And don't miss the juicy drama with MicroStrategy's crypto gamble. Yay, it's getting wild out here. Hit play and let's get into this roller coaster of tech stock news. Hey tech enthusiasts, get ready for a wild ride. Apple's been making headlines today, and no, it's not because they're releasing a new gadget that will have you questioning all your life choices. Instead, it's a bit more serious. Apple is in hot water with the European Union, facing an antitrust probe that could cost them up to 10% of their global revenue. And trust me, when Apple sneezes, the tech world catches a cold. So, what's cooking in Brussels? The EU regulators have accused Apple of breaking some tough new digital competition rules under the Digital Markets Act. This law is basically Europe's way of saying, enough with the tech giant dominance, let's give startups a chance. Apple allegedly stifled competition by preventing app developers from steering consumers toward cheaper services. Think about that the next time you shell out $4.99 for an app. If found guilty, Apple could face penalties amounting to 10% of its astronomical $383 billion global annual revenue. And if they go for the repeat offense, the fine could skyrocket to 20%. That's a lot of iPhones, folks. This probe is a landmark moment because it's the first time the EU is flexing its DMA muscles on a big tech group. Now, Apple has been making changes to its App Store to play nice with these new rules. In January, they announced major overhauls to allow iPhone and iPad users in Europe to use alternative app stores. Yes, you heard that right. Multiple app stores on your Apple device. They've also planned to cut fees and offer alternative payment methods inside apps. But the EU is saying, not so fast. They argue that Apple's measures still restrict developers from providing pricing information directly within their apps or steering users towards deals on other platforms. EU's Internal Market Commissioner, Thierry Breton, even suggested that Apple's new slogan should be Act Different. Burn. He emphasized the need for compliance, ensuring that developers are less dependent on Apple's App Store. Apple, of course, is confident they're on the right side of the law. They've stated that more than 99% of developers would actually end up paying the same or even less in fees under their new business terms. But the EU isn't convinced yet. Their preliminary findings will be finalized within a year from when the investigation kicked off in March. This crackdown is a part of a broader trend. Other tech giants like Google, Meta, and Amazon are also under the DMA microscope, making changes to comply with these stringent regulations. Basically, Europe is telling big tech, play fair or you're going to pay. In the stock market today, Apple closed at $207.49, down about 1.4%, but it's slightly up in pre-market trading. Despite these legal hiccups, Apple stock has seen significant growth, climbing by 11.77% year to date. So how will this saga end? Will Apple act different and comply with the EU's stringent rules, or will they face the music? Stay tuned, because this story is far from over. Hold on to your GPUs, folks, because NVIDIA is making headlines and making waves today. This tech titan is at the center of some major buzz, and let me tell you why. First up, a Wall Street research firm is predicting big things for NVIDIA. Constellation Research believes NVIDIA stock is set to soar a whopping 67% over the next 2 years. Yep, you heard that right, 67%. CEO Jensen Huang is being hailed as a visionary, plotting a future where NVIDIA isn't just about GPUs for gaming, but is a foundational player in the AI era. Constellation's Ray Wang threw in 7 reasons why NVIDIA is poised for this epic climb. From dominant market share in AI chips to the sticky ecosystem created by NVIDIA's CUDA software, the company has a lot going for it. Wang also pointed out that NVIDIA's competition is lagging behind by a solid 24 months and hinted at some seriously exciting product roadmaps we're not even fully aware of yet. Essentially, if you've been contemplating buying NVIDIA stocks, now might be the perfect time to dip in as per Wang's guidance. Next, let's talk about the roller coaster that is NVIDIA's market cap. Earlier this week, NVIDIA leapfrogged Microsoft and Apple to become the most valuable company in the world by market capitalization. But hold on, before you go throwing confetti, the company slid back to 3rd place not long after. Despite this little slip, it's not time to hit the panic button. The competition is tight, and with an earnings report around the corner, there's a lot at play. AI's newfound fame has rocketed NVIDIA to unprecedented heights, capturing roughly 80% of the AI chip market. CEO Jensen Huang's early bet on GPUs for AI applications has paid off big time, making NVIDIA a behemoth in this space. However, there's a small word of caution to keep in mind. For NVIDIA to maintain this momentum, end-user demand for AI needs to stay strong. Companies like Amazon, Microsoft, and Alphabet run their AI servers on NVIDIA chips. So as long as these AI applications keep delivering, NVIDIA looks set to keep climbing. Now, if you're still not convinced NVIDIA is the future, let me drop some wisdom from Jim Cramer. The venerable stock market guru praised NVIDIA over industry giants Apple and Microsoft, even predicting that NVIDIA will eclipse them in earnings by 2025. Cramer emphasized that nearly every tech company, whether it's in hardware, internet connectivity, or data centers, needs NVIDIA's chips. He even went as far as to say that NVIDIA's current stock price, which some might consider overvalued, tends to look like a steal a year later. In Cramer's eyes, NVIDIA is the one to watch, and holding on to it is a smarter move than selling off. So there you have it. With massive growth predictions, a battle for the most valuable company slot, and endorsements from big-name analysts like Jim Cramer, NVIDIA is definitely the talk of tech town today. Whether you're an investor or just a tech enthusiast, keep your eyes on NVIDIA. The future is looking bright and shiny, just like their GPUs. Hey tech aficionados, buckle up because we're diving into some exciting news about HubSpot today. First up, headline news. HubSpot's stock surged by 3.8% to close at a shiny $578.43. Quite the leap considering it's been a bumpy month with a 6.3% loss over the past 4 weeks. But hey, what's a little volatility between friends? Alright, so what's fueling this upward trajectory? Well, it's a 1-2 punch of pricing strategy and AI innovation. HubSpot recently unveiled a new seat pricing model, which essentially lowers the entry barrier for new customers. Think of it as a delicious appetizer that lures you into the full-course meal. This model aims to reduce friction for upgrades, making it easier for smaller clients to start using HubSpot services and eventually scale up, leading to more robust customer cohorts over time. Moreover, HubSpot isn't just sticking to pricing wizardry. They've also integrated HubSpot AI across their product suites and customer platform. And the cherry on top? All these AI features come at no additional cost to the users. For businesses trying to squeeze the most juice out of their budgets, this is a pretty sweet deal. But wait, there's more. Analysts are not just enamored with HubSpot's current performance, they're bullish about the future. The company is expected to report quarterly earnings of $1.63 per share, reflecting a year-over-year increase of 21.6%. Revenue predictions are equally promising at $618.14 million, a solid 16.8% growth compared to the same quarter last year. Empirical research tells us that earnings and revenue growth aren't just good for boardroom bragging rights, they often lead to stock price movements. For HubSpot, the consensus EPS estimate for the next quarter has remained stable over the past 30 days. While stability might not be as thrilling as wild upswings, it typically indicates that the market's faith in the company isn't shaken. So keep those eyes peeled on Hubs, because this recent jump might just be a sign of more strength to come. Now, HubSpot isn't floating in space alone. It's part of the Zacks internet software industry, where another player, EverCommerce, also posted a 2% gain recently to close at 10.2. However, EverCommerce has had a tougher time with a 5.1% return over the past month. Their EPS estimate for the upcoming report holds steady at 91 cents, representing a drastic change of 133.3% from last year. So while they're stable, they're certainly not flying as high as HubSpot. In summary, HubSpot's stock surge comes on the back of smart pricing strategies and robust AI integration. With solid earnings and revenue growth expected, this stock is certainly one to watch. There you have it, folks. HubSpot flexing its muscles, riding the waves of innovation and smart pricing, while keeping Wall Street analysts buzzing. Stay tuned because the tech world is always full of surprises. Hey tech enthusiasts, let's dive into today's hot topic. MicroStrategy is making waves in the stock market again, and you won't believe what's going on. First up, MicroStrategy stock took a dip as Bitcoin also tumbled below $62,000. MicroStrategy, led by the eternally bullish Bitcoin advocate Michael Saylor, recently added another 11,931 Bitcoins to their ballooning stash, costing them about $786 million. Now, they hold a staggering 226,331 Bitcoins, currently worth more than $14.9 billion. The company's shares dropped nearly 10% today and are now hovering around 1,337.56. Will Saylor's crypto gamble pay off long-term, or is this a sign of rocky roads ahead? Let us know what you think in the comments. Next, Canaccord Genuity lowered its price target for MicroStrategy from a sky-high $2,047 to a still impressive $1,826, while maintaining a buy rating. Despite lowering the target, Canaccord remains positive about MicroStrategy's future, especially given its massive Bitcoin holdings and enterprise analytics capabilities. This tweak reflects recent Bitcoin volatility and tweaks in MicroStrategy's premium valuation relative to its Bitcoin stash. Canaccord sees the company's dual focus on enterprise software and Bitcoin as a compelling investment, anticipating future growth with cloud-based solutions and AI-driven products. Are you as optimistic as Canaccord? Drop your thoughts below. Now, hold on to your hats because things get spicy here. Kerrisdale Capital is betting against MicroStrategy. This investment firm is shorting MicroStrategy stock, claiming it's trading at an unjustifiable premium compared to Bitcoin. Kerrisdale's chief investment officer, Sam Madrangi, argues that MicroStrategy's robust Bitcoin buying spree, already at $14.6 billion in holdings, doesn't warrant the high enterprise value attached to the company. He believes that MicroStrategy's software business alone is worth far less and criticizes Saylor's Bitcoin buying strategy as lacking real value addition to the company's core business. Madrangi calls Bitcoin a get-rich-quick scheme, while also shorting Bitcoin mining firms. What do you think? Is Kerrisdale onto something, or are they missing the bigger picture? Sound off in the comments. All this news has certainly stirred the crypto pot. Michael Saylor and MicroStrategy remain at the fulcrum of the Bitcoin roller coaster, and everyone, from bullish analysts to skeptical short sellers, is watching closely. So viewers, what's your take on MicroStrategy's strategy in today's market shakeup? Do you think MicroStrategy will skyrocket or plummet in the coming months? Is Bitcoin still the digital gold Saylor believes in, or is it a bubble waiting to burst? Share your insights, predictions, and even your wildest theories in the comments below. We can't wait to see what you think. Until then, stay savvy and keep those portfolios diversified. All right, tech aficionados, let's zero in on NVIDIA and decide whether we should buy, sell, or hold based on the buzzing news today. Spoiler alert, I'm leaning towards buying, and let me break down why. First off, Constellation Research is exuding optimism, predicting a jaw-dropping 67% increase in NVIDIA's stock over the next 2 years. With their dominant market share in AI chips and a sticky ecosystem developed by CUDA software, NVIDIA isn't just coasting. It's strategically positioned at the spearhead of the AI revolution. Now let's talk about the massive potential here. NVIDIA has even temporarily outranked Apple and Microsoft in market capitalization, showing off its growth spurt. Even though it slipped back to third place, this brief leapfrogging is a testament to how much Wall Street believes in NVIDIA's future. CEO Jensen Huang's foresight into AI applications with GPUs has cemented NVIDIA's place as the big kahuna in this market, controlling about 80% of the AI chip landscape. And these AI applications? They're spreading like wildfire, with giants like Amazon, Microsoft, and Alphabet all relying on NVIDIA's chips. Plus, stock market legend Jim Cramer is heaping praise on NVIDIA, even predicting they'll surpass Apple and Microsoft in earnings by 2025. If Cramer's predictions hold even a fraction of truth, NVIDIA's current stock price could indeed look like a bargain in hindsight. But of course, let's not ignore the small word of caution. NVIDIA's growth spurt is highly tied to the continuing demand for AI among end users. If AI applications continue to deliver, NVIDIA will stay strong. And believe you me, the AI wave shows no sign of ebbing anytime soon. So to cap it off, I'd say buy. NVIDIA's robust position in the AI market, visionary leadership, and glowing endorsements from market analysts make it a tantalizing investment right now. But remember, folks, always do your own research before making investment decisions. These insights are here to guide you, but your portfolio is as unique as you are. Happy investing. All right, tech enthusiasts, that wraps up today's action-packed market update. Apple's facing the EU's wrath, NVIDIA's poised for stratospheric growth, HubSpot's stock is surging thanks to smart strategies, and MicroStrategy's Bitcoin bet keeps everyone on their toes. If you enjoyed the ride today, don't forget to hit like, subscribe to the channel for more updates, and share this video with your fellow tech lovers. Join us again tomorrow for another dose of the latest and greatest in tech news.